All right, guys. Good evening. Trust you all are doing fine. It's Forex Doctor speaking. Welcome to our 7 days free Forex trading class. Okay. You're welcome. And I want to assure you that you are in safe hands. Okay. You're in safe hands. You're with a pro and you're in safe hands. Okay. Now, during the course of this class, you're going to be learning what I call advanced market structure. Okay. Liquidity, points of interest, and also risk management. Okay, you're going to be knowing all of these. Some of you might have heard of them and all that. You're going to be knowing and learning about them. Okay, they're part of the things I teach in my main class, but I'm bringing it out to you guys for free. Okay, bringing it out to you guys for free. Great. Do well to complete your registration, my broker, MH Markets. Okay, they're actually the best broker in the Middle East. One of the top brokers in Europe and also across the world. Okay, do well to complete your account sign up with them. Great. So let's move to the charts. Okay, great. All right. I'll be teaching you guys how to catch trades like this. Okay, and also by the end of this class, you would even do cleaner than this. Okay, exactly what I use to get this trade is what I'm going to be teaching you guys during the course of this 7 days class. Okay. In the course of this 7 days class, what I'm going to be teaching you guys, okay, how I caught this kind of trade, okay? So for day one, okay, or actually let's say teaching day one, because this class started 2 days ago, but teaching days started today, okay? So for teaching day one, we're going to be looking at market structure. Day two, we're going to be looking at liquidity, okay? Day three, we're going to be looking at POI. POI stands for point of interest, okay? Day four, I'm going to be teaching you how to combine all, okay, to get a very, very perfect trade, okay, just like this one I showed you, okay, just like this trade, okay. And day five, I'm going to be teaching you risk management, okay. So you're going to be putting everything to get a trade like this, okay. This beautiful trade here is a trade in which if you had risked over $10 for this trade, you would have made at least 98, yes, $98, around $98.7, if not even $100, okay, in profits. That is what you would have made from this trade, okay? So you see people doing $10 to $dollar. It is not magic, okay? It is discipline, it is learning, it is information, and not just any kind of information, but the right information, okay? So let's move on, okay? Now, I gave you guys a task yesterday to watch a video of which I believe you guys have watched, okay? You guys have watched, and that would lead, okay, or form the basis of what I'm going to be teaching today, okay, which is market structure. So market structure is simply the way market moves, okay? The simplest way you can define market structure is what is the way market moves, okay? So we have two kinds of market structure: basic market structure and the advanced market structure. Okay, so before we get to the advanced way, I'm going to be teaching you guys the basic market structure. Okay, the basic market structure. And under the basic market structure, we're going to be dealing with what we call order flow. Okay, what we call order flow. Okay, to order something and for it to flow, order flow. Okay, order flow. Great. Okay, so I trust you all are with your notepads to get this down. Order flow, okay? Order flow. Order flow is what we're going to be dealing with. Order flow is what we're going to be. You couldn't start shortly. Kindly give me a minute to do something. I don't miss out on the class. I won't of them to miss out on the class. All right, then let's go. Now, what is order flow? In simple terms, okay, order flow is the real-time buying and selling activities in the market, okay? It shows you who is in control of the market. Now, in the market, there are three scenarios that can occur in the market. Either buyers are in control, okay? Whether buyers are in control, market keeps going up and up and up and up, okay? See markets doing things like this. In that video I told you to watch, you would understand this. You see market going up. This tells you buyers are in control. Buyers are leading this market, okay? And then you have, sorry, and then you have a situation whereby sellers are now in control, okay? Rapid decline in prices, okay? Mine might not be really rapid, but you see drop or decline in prices, okay? This shows that sellers are in control of the market. And then you have what we call sideways market, okay? Where both the buyers and sellers are in control, but at different points of the market, but you keep seeing the market ranging. We call this what a consolidating market. So when buyers are in control of the market, when market is going up, it is said that market is bullish, okay? When we say market is bullish, it means market is going up. Market is in an uptrend. Buyers are in control. And how does the word bullish relate to this? When a bull, which is the animal, wants to pick someone up from the ground, you see, it first goes to the ground and raises the person up. Okay, good. So it takes you up. Price is moving up. That's where the word bullish comes into this. Okay, so in a bullish order flow or in an uptrend, price is said to be going up, and buyers are said to be in control. Okay, and for a bearish order flow, now for a bear pounces down on you, okay? Market is said to be coming down, okay? Market is said to be coming down. And a consolidating market, you see buyers in control here, sellers, buyers, sellers, but they keep being in the same range, okay? No obvious, no one is said to be in total control. It's just like a tug of war where you have 50 kg on either side, okay? Left 50 kg, right 50 kg. No one is really, really stronger. They keep going front, back, and that is how the consolidating market works, okay? Now, let's look at the bearish order flow, okay? Let's look at more things on this bearish, bullish, and stuff order flow, okay? Let's look at more things. Now, in the bullish order flow, this is the way it works, okay? Market moves up, creating what we call higher highs and higher lows, okay? As the market is going higher, in those at those higher points, they are also the highest of it. Okay. Now, this points in the market, okay, market is going high, but this point is said to be a higher high. And when it retraces down, this lowest point before it moves back up, said to be what? A higher low. So we have a higher high here and you have a higher low. Okay, higher high, higher low. So if you see HH on a chart, okay, it signifies higher high, and HL, okay, derived from the initials, it signifies higher low. So we have higher high, higher lows. Market moves, that is for basic market structure, moves in this sequence, okay? So it creates new prices, okay, new price levels, okay? Price needs to break the former higher high to get to a new higher high, comes back down, the lowest point is higher low, but everything in general keeps on going up, okay? Then we have for the bearish now, okay, for the bearish, this was the previous was for the bullish. For the bearish now, market is going lower. Okay, market is going lower. So we have what we call lower highs and lower lows, okay? So we're going to be having lower highs. This is a lower low though. Then you have lower highs, lower lows, lower lows, lower highs, lower lows, lower highs. As simple as that, okay? It is going low, okay? But when it pulls back up and leaves that highest point before falling, becomes a lower high, okay? So when you want to describe all this, this is the way you can easily get it, okay? For a bullish market that is going up, you can always have higher for the first part, higher. Then now, what kind of higher is it? It's a higher at this highest point, it is called higher high. When it drops and it gives the lowest point, it's called higher low. But for a bearish trend, okay, when it goes high, it's called lower high. When it drops down, lower low. Okay, as simple as that. Okay, as simple as that. So for consolidating markets, it always gives you what we call, this is it, okay, going up and down, support and resistance. Okay, so you have the markets ranging below a support. When you want to stand on somewhere, the floor acts as a support. Okay, what is this? Sorry about this. The floor acts as a support. Okay, floor acts as a support. Okay, this floor acts as a support. Okay, and this high, the roof of your house, that prevents you, no matter how tall you are, you have to succumb to it. Okay, you have to bend to it. Okay, that is a resistance. Okay, so in the consolidating market, you do have a support, you have your resistance below. As simple as this. Okay, as simple as this. Now let's move further. Okay, let's move further. Let's move further. But before we move further, does anyone have any question? Does anyone have any question? If you don't have a question and you are clear, just simply highlight in the comment section, I am clear. Okay, just tell me you are clear. Just use the comment box to tell me you are clear. So I move on. All right, guys. Okay. If you have a question, you could ask. Okay. Or you could write it down. We'll tend to it later on in the class. Okay, great. You all are clear. That's lovely. All right, let me get this chart cleaned up and we'll move. Great. All right. So now let me be taking you through some terms, okay, in the market. Now, first of all, we have what we call a break of structure. Break off structure, okay? And it is known as BOS, okay? BOS. In the Forex market, we do use the initials to refer to things, okay? So when you hear BOS, it means break of structure, okay? Okay, I mentioned it in our video, okay? A video I told you guys to watch. Okay, great. Now, a break of structure occurs when the price of an asset moves beyond a higher high. Now, look at this, or higher low, or lower low, sorry. So for a bearish trend now, when for a bullish trend, sorry, when market is going up, you have price doing this, okay? Great. You know that the price, before price creates a new higher high, before price created this higher high, what did he have to do? He had to break the former higher high, Abby. He had to break past the former higher high. Now, this point at which market broke past it, this line here, is termed what? A break of structure. Good. This place here is termed a break of structure. This place here is termed a break of structure. And when market starts to move in a bearish trend, before it breaks that lower low, before it creates a new lower low, market will have to do what? Break the previous lower low, okay? So this is termed break of structure, break of structure, break of structure. As simple as that, okay? That is what a break of structure stands for. Okay, that's what it is. Now, we now have a change of character, okay? Change of character. It is a form of break of structure, but happens when a bullish market wants to change to a bearish, or a bearish wants to change to a bullish, okay? It signals a change, okay, as the name implies. We call it chock, CHOCH, okay, chock, but it stands for change of character, okay? Now, when you have something like this, you have the market, something like this, and then the market now wants to change. Market now starts doing from, remember it was buying, now it now wants to start selling, okay? This point at which the market changed, okay, to start selling, okay, to start selling is what we call a change of character or a break of structure with a change of character. Okay, a break of structure with a change of character. Okay, fail to take out this, then you now know that you are not meant to be buying anymore. You should now be doing more of selling. Okay, because the buy pressure has reduced. Okay, buy pressure have reduced. Okay, so mind you, it is advisable to always trade with a trend. Okay, as we move on, you're going to understand what I mean by this statement. Okay, it's advisable to trade with the trend. Okay, it's advisable to trade with the trend. Now, let's move on. Okay, let's move on to something much more deeper in this course of learning. Okay, that's great. Great. Let's go move on. Now, there's something called the order block. Okay, I'm going to be talking more of it when I teach POIs, but then I need to introduce it. Okay, now what is the order block? Okay, what is the order block? Before we move on, has anyone ever heard of the term order block? Has anyone heard of it at all? If you've heard of it, just let me know. Yes. OB or order block. Okay. If you've heard of it, yes, no. Make use of the comment sections. Has anyone? All right, great. Great, 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 great. Now let's move. Let's move. Now the order block, okay, in its simplest definition, okay, is the last upward or downward candle, okay, before a rise or decline in price movement. Now, what do I mean? You have price doing things like this, ranging around, and then you just have price just do something like this and start moving continuously. Okay. This last point here, the last candlestick, okay, last opposite candlestick. I will show you what I mean by that very soon. Here is what we identify or what we refer to as an order block. Now let me show you what I mean in more clearer term. Okay, this is an order block. You have two types of order block, by the way, bullish and bearish order block. Now you have price levels coming down like this. You have series of price levels coming down. Market is said to be selling. Maybe at the same time, you just have little hiccups on the way. Market resumes by selling. Okay. Market now resumes and start doing impulsive moves. I'll start seeing. I know you guys must have seen charts where tries to do something. Now let me change the colors, okay? For easier understanding. Four. Let me just make it the regular green candles, okay? No, this is meant to be red. Red. Mm, Great. Now this looks more like a chart, okay? So you have price doing this. Now, great. Now, you have price doing this, coming down. Before it starts moving up impulsively, you can see price was selling. Before it started moving up impulsively, okay? This last opposite candle, okay? Last opposite candle, before it started moving up impulsively. Moving up impulsively means it is bullish now. But the last candle, or the last opposite rather, the last opposite candle should be what? Bearish. When you hear opposite, it's no longer bullish, but bearish. If we say the last candle, it would have been this one. But last opposite is this, okay? Look at it. Highlighting this candle out, okay, drawing a rectangle and extending it out on this candle makes it your POI, okay, makes it your POI, a point of interest. And what kind of point of interest is this? It is what? An order block, okay? So it is expected that price, if this is valid, okay, I'll be teaching on validity of this in the coming days. Price will do what? Price will drop down, okay? Price will later return back to this price level, react from it, and start buying impulsively, okay? And hitting a certain target, okay? I'll be showing you guys where your target will be and everything, okay? Hitting a certain target, and you're entering here and it's going your way, provided it is valid, would raise you great amounts of money, okay? Okay, that is how it works. Okay, that is it. Simple as that. That's basic market structure for you. Okay, price will return to this your point of interest. And now, why is it so? Let's just give an example. When, let's see, when Apple shares or Apple stocks came as low as no, let's use iPhone. Let's use the iPhone instead. If an iPhone 17 is sold for $200, a lot of people are going to buy it. Okay. But when an iPhone 17 rises up to $1,500, not many people are going to buy it. But when it returns back to $200, what do you expect to happen? People waiting for it. People will wait for it. And when it comes back to $200, what happens? They are going to ride with the price, okay? They are going to ride with it and enjoy the price, okay? And enjoy everything, okay? So that is how it works. As simple as that, okay? So this last opposite candle, before price started moving and people started buying, it said that when price returns to it, people are going to do more of the buying and price will ride up to it. And same goes for the selling, okay? This is for the bullish example. For the bearish, it's the same thing, okay? Let me just invert it due to time. Let's just invert it, okay? So using the direct candle, this thing here is supposed to be green, and here where you see green is supposed to be red in this case, okay? But I believe you understand what I mean, okay? As simple as that. That is how I was able to, oh, sorry, no, modify, I don't, that was how I was able to catch this. Look at what happened here. I mapped out the last opposite candle from this point. You can see price was coming up, and the last candle here was blue. Don't mind my chart colors, okay? The last candle was blue. I mapped it out before price started falling, okay? Before sellers started entering. This was the last buy candle, okay? I dragged it out to my rectangle. And what happened? Price came back to it, tapped it, and I sold. And what happened? It hit my target, okay? This was my target where this blue ends. And it hit my target, and I secured money off the market, okay? As simple as that. Now there are some confluences that needs to be added to it, okay, which I'm going to be teaching you in the coming days, okay? What makes it valid? It is not everyone you see that is going to hold, okay? But there are things that make it valid, such as your liquidity that I said I'm going to be teaching about. More things on liquidity, the advanced market structure, and all that, okay? And all that. Liquidity, advanced market structure, and all that. As simple as that, okay? So I've been able to teach you guys the basic market structure today, okay? Basic market structure today. Basic market structure today. I'm able to teach you guys that today. So let's quickly review something, okay? So this is what you expect of the market to do. And this is declining, gives you your last opposite candle, moves up, creating higher highs, higher lows, whatsoever. But price will return back to it, in order for you to buy, okay? And you buy from this level. Okay, as simple as that. You've seen it on this chart I just showed you. Okay, so in the next class we're going to be looking at the liquidity concept of the strategy. Okay, liquidity concept of the strategy, and we'll be on the POI class. Okay, on the POI class we're going to be looking at more on the other block. Okay, more things that make it valid. Okay, what a valid order block looks like, how to map out a valid order block. We'll be looking at that. Okay, we'll be looking at that. And on day 4, we'll be looking at how to combine all both the advanced market structure part of the strategy, which we're going to be looking at tomorrow too, before we look at liquidity part. Okay, the POI part of the strategy. Okay, which we just did a brush on today. We'll be looking more, man. And also that combining or putting everything all together, and would close everything with what we call risk management. Okay, it's one thing to know all the ways to analyze and everything. It's another thing to help you manage your risks so you don't get blown out from the Forex market. Okay, now I am going to be dropping some notes on the group. Okay, little notes on the group concerning what I've taught. Okay, so if you guys don't really get some stuff on the video, the questions will come. We'll come to the question session shortly. Okay, but those notes are another source of knowledge, more like a backup to this class. Okay, immediately after the class, once the video is done from the editing crew, we are going to be dropping the notes alongside it. Okay, we're going to be dropping the notes alongside it. Okay. So now let's move on to questions. Is there anyone with a question? Is there anyone with a question? Okay. Is there anyone with a question? Any question? Make use of the comment section, please. Make use of it. Okay. No, I'm getting the no. Seems you guys are all clear. Okay. Seems you guys are clear. I'm getting the no things. Oh, that's a good sign. That's a good sign. That's a good sign. Great. Great. All right then. Would call it a day. We'll call it a day. Okay. Remember to follow us across our socials. Okay. I'm gonna be dropping our socials. Okay. I'm gonna be dropping the link for you guys. Okay. Our TikTok, Instagram, Twitter, rest of other socials. Okay. Rest of other socials. Okay. When I drop not only Forex news but financial news. Okay. News about what's going on the financial market. You're gonna be up to date. Okay, you're gonna be up to date. One thing to know your technicals and everything is another to have the good source for financial news. Okay, you know what's going on in the forex market, what's going on in the world of finance. Okay, simple as that. Simple as that. So I'm gonna be seeing you guys. Oh, sorry about that. I'm gonna be seeing you guys tomorrow, same time, and we're gonna be dealing with liquidity and the beginning of advanced market structure. Okay, liquidity and the beginning of advanced market structure. All right, guys, good night.